like today, I was super excited to be able to do this because I get to, kind of focus on something like this, get back to just teaching and, telling people, what's going on out there. And today I think this is going to be a lot of fun, a lot of answering questions. We got this whole session, which is kind of the encore for some of the things that me and you learned and our whole team learned on this 3-day event that we just got done, which was just purely epic. The only downside to the 3 days, there should have been 1,000 people on there. What do you think?
Yeah. I think it's going to start spreading though. Everyone I've spoken to says they're telling all their friends and family.
Yeah, absolutely. Absolutely. And we've got something really crazy. So what I'm going to do, oh, you already started the recording? Awesome.
I did not, but it's recording.
Oh, okay. So we've been recording the whole time. Fantastic. Well, welcome everybody to another wealth webinar series. This one is going to be epic because we are doing something different than we've ever done. Stephen and I are literally going to do an encore of the 3-day event that we just put on, which was to us one of the probably most impactful 3-day events we ever put on. We had bonus sessions every single day, which for those that stuck around for the bonus session, I think it was eye-opening. It was really eye-opening. And you know what? I got a little video that I created that talks a lot about money and what we do with our money. Can I play that real quick, Stephen?
Yeah, for sure. I don't know what you got, but whatever it is if it has to do with what we saw over the weekend. I mean, that's stuff I had never even knew existed. I thought I knew everything about this industry. I learn something new every day, it seems like these days. So it's amazing.
For sure. So let me pull this up here. Let me get rid of that one. And folks, if this doesn't make you laugh, then you just have no sense of humor. And this is a video that has very few words. And why can't I get it to play here? I'm having trouble. Stephen, here, when I'm sharing my screen, can you tell me, do you see is that me standing there? Do you see that?
I see the moneyschooltraining.com.
Okay, that's bizarre. Okay, hang on. For some reason, every time I click to share, maybe we won't be able to play this screen too. This sucks. All right, what do you see now?
You.
Oh, okay. All right, so there we go. So let me play this. There's a lot. You're gonna have to listen really careful here because this is what we're doing with our money if you're not attending our events. This is more than likely what you're doing. Here we go. And there you have it.
I don't think the volume was working.
Exactly. Because there is no volume, because that's exactly what it is. We are sitting there waiting for something magically to happen to us, but nothing is going to happen to you or to your money until you actually start putting your money to work. So that video, it was the funniest thing the other day. Steven's seen that one, but we were sent that video and I watched it. I'm thinking the same thing. The volume's broken. Why is there no volume? There's not supposed to be. We sit around expecting and thinking that our money's going to do something, that our money's going to go to work magically, but we simply do nothing. And because of that, our money sits right on that, just like that high table sits there staring back at us, waiting for us to put it to work. And oh man, there's so much. We've got 2 videos that Shauna worked hours on today to play today. And these are recaps from the 3-day. And Claire said, yeah, that's what I used to do. And these videos are pretty impactful. What do you think? Do we want to do any announcements before we jump into the first video? What are you thinking?
Well, listen, we wanted to do this encore following the 3-day because it usually takes a couple days for kind of all this stuff to settle in. And we We teach so many different strategies, and doing all the follow-up post money school essential calls this week with the students that were on, hearing, what they got out of it and listening to, their stories and their excitement and everything that they're doing right now to implement, like we say, one or two strategies. It's really cool. But, the more I talk to them, the more I realize like we really do give a lot of training during those 3 days, and it's a lot of different subjects. So, and on top of that, I know a lot of people can't watch live, so you might not get your questions answered. So we're going to start doing these encores following the 3 days, because it's so very important that you are able to ask your questions. You're able to get the help that you need. And if you weren't on the 3 day, then, maybe this will give you a good insight to what you missed, and you'll join us for the next one, because it's just unbelievable. So I believe what we're showing right now is Harry Dent. Is that right?
Yeah, that's absolutely it.
So this is a world-renowned economist, and Harry is one of the guys that's kind of, he predicted a lot of the crashes in the past, and he's real big on history and everything that we talk about when it comes to what the markets are doing and market patterns, and the bubbles that we're currently in right now, and all the stuff that we're going to talk about today. But really, Harry is basically making the pitch for us on what money school is. If you ever wanted to wonder yourself, what is money school? Listen to Harry Dent right now in these few minutes that he's going to talk, because that's what money school is. It's how to teach you to avoid these crashes, how to get, position yourself in different strategies that are going to allow you to be able to succeed and become financially successful. So yeah, I don't know what Shauna made here, taking that long video that Harry went on that rant for like 45 minutes to an hour, but she broke it up to, I think, less than 10, 7 minutes. So, all right, we'll see. This should be good.
And we normally don't even record the bonus sessions, but I almost felt obligated to record this, because I don't think anyone realizes, well, you guys can look up Harry Dent Jr., but I don't think you realize how difficult it is to get a guy like that to come on to an event without paying him. And, and he did it. He agreed to come on, and he gave us 15 minutes, and we kept him going for 45 minutes, or maybe he kept himself going. But what Shauna did is she boiled down 60 minutes worth of his rant to 7 minutes. And I want to play this because there's a lot that you guys need to hear in here. So folks, just listen and pay attention to this, because I'm telling you, what we're going to play right now is something all of you really need to pay attention to in a very big way. So let's see, get the screen up, see if I can do this the right way this time. Oh yeah, this is going to work perfect. All right, let's play this, Stephen. You can see the big green screen, right?
Looks good.
Awesome.
Yeah, move those.
Shauna did such an awesome job. Now, folks, what we're going to do here as we play this is I'm probably going to pause it, and we're just going to talk about it. Okay. I'm going to pause certain sections, and I want all of you to participate. I want all of you to chat in your questions or put your questions in the Q&A about what he's saying, because listen, he talks fast. He's got a ton of knowledge, and I want to make sure that at least every single person on this training gets one or two golden nuggets out of this. So as I'm playing, I'm going to pause it. And we're just going to talk, but I want all of you to chat your questions in or put them in the Q&A so that we can come back and answer those questions, maybe in a simple form or a way that everybody can understand, because some of the stuff might be high level, but it all ends at the same place. So here we go, folks.
You know, like we all know something's coming. It doesn't look good. Something stinks out there. What is it?
Well, we are in the greatest bubble in history. We've never seen a bubble across all asset classes, so global. And all I hear from most economists and commentators, well, this isn't really a bubble because of whatever. That is so typical of bubbles. People get high in bubbles. When stocks go up this much year after year, real estate goes up this much year after year, you're sitting on your you-know-what, making money doing nothing. What's not to like about that? The problem is they're not real. They start real, and this one is the ultimate, Chris, because this boom, I was predicting back in the early to mid 80s that we'd see the greatest boom in history with baby boom spending that nobody saw coming in such a large generation. But in 2007, that peaked right on cue, and we've been living off of money printing, just printing money out of thin air, and that money's not going into the economy. The economy's been growing 1.6% average since 2009, the worst growth in all of history, and yet we got the strongest, bubbliest greatest stock market advance in history in this very weak period. It's because we've been living off of printed money while the baby boom generation spends less and less just to get people to spend a little more. And then what we really have is a 4% plus growth economy for the affluent, the top 10 to 20%, and a zero growth for everybody else, Homer Simpson and the other 80%. And that's not healthy either. So what I'm seeing here, and this is coming a little late on my cycles because so much stimulus, I think stocks are peaking this year. I think it could be happening now, or it could happen by early June in the near term. And at the very latest, later this year, I think it's most likely happening now. This thing has gone up and up and up. Now we have interest rates rising and inflation late stage, and that's the type of things that work against this. But again, what we've had is exponentially more money printing, but something called money velocity, how much the money is invested and profited from and reinvested, has been going straight down opposite. This is like the jaws of death. To have money velocity collapsing and money supply going up only because of money printing and then getting this lousy 1.6%. So I think it's a great time to sell stocks. It is a great time to get into alternative investments, things like you're talking about. When this bubble peaks, it's going to be a deflationary scenario. Consumer prices are going to fall, all financial assets, real estate, stocks, and whatever's gone up the most, the stocks or the real estate, the more it's going to fall. Is Omaha going to fall much? No, because nobody wants to live there except for Warren Buffett, okay? I tell people in real estate, what was it worth in the last downturn around 2011 to 12? That's the most likely target, and it's going to be lower than you think. And at the worst case, what was it worth when the bubble started back in 2000? And stocks are going to go down 65 to 70% at a minimum, and maybe as much as 80 or 90.
So let's just stop right there, Stephen, and let's chat about that. So here you have one of the world's leading economists. And you guys can all do your due diligence on Harry Dent Jr. And, you know, there's many economists out there that go public and say things. People, I mean, and not only economists, there's some very well-known investment advisors or very well-known hedge fund managers, such as Ray Dalio. If you don't know who these people are, I understand. It's not like you're seeking out hedge fund managers or economists, because they can be dry and boring. But every single one of these people you listen to, whether it's, you know, Harry Dent Jr. or Ray Dalio, or heck, I mean, I played videos last time or actually at the 3-day of Warren Buffett and also Bill Gates selling lots of their portfolio. How is it that all these people that are in the know, that have all this knowledge, this is all these guys do is study this and study patterns? Like, how boring, right? They're not out there doing the things that we're doing to have fun. They're literally diving in and figuring out like what is coming next and how do they get paid? Well, if they get it right, they get paid tremendously because they know how to invest very differently than the average person. So what he's talking about is a crash of the asset bubbles, which are being inflated through government printing of money. There's no secret that government's printing just a wee little bit of money. 1 trillion, 2, 5. How much are they actually printing? It's about 5.3 trillion to date with the infrastructure deal. And then with these 2 new family plans that they're doing, the new stimuluses, there's 2 of them, that will push us over $9 trillion, over 50% of the GDP just to cover debts. Okay. Never before in history has that happened. And it's not going to stop. They're doing $120 billion in money printing. So when you think of that, like, what are you hearing when you're turning on the fake news? Well, if you're on CNBC, MSN, Fox, any of them, all they seem to want to talk about is inflation, inflation, inflation. Harry didn't say much about inflation. What did he just say? He said deflation. The asset bubbles are going to pop. Consumer goods and pricing and everything is going to go down. That sounds pretty darn good, doesn't it? If all the asset prices go down, if we can buy property cheaper than we are today, if we can buy real estate, or if we can buy stocks cheaper than we are today, like, that's good, right? Absolutely. Potentially, if it dropped 60 to 80%, can you imagine being able to buy stocks 60 to 70% lower than they are today? Folks, I hope you guys are thinking about what I'm thinking about, but I'm thinking, holy crap, we're all going to get rich. But the question, or the real problem is, You can't build wealth and get rich because of a deflationary period when the price goes down if you're not prepared and ready for it. And that's kind of what he's talking about. He's signing or ringing the bell. He's warning us, saying this is coming. Get ready. Warren Buffett says, buy low, sell high, and don't lose money. This is the sell because the market's high. It's the highest it's ever been. Real estate, the highest it's ever been. And I'm not sitting saying that all of you should liquidate all of your stocks and all of your real estate, nor is he, but definitely some of it. Okay, maybe I'm on the extreme side. I'm trying to sell all my real estate as quick as I can. I'm trying to get out of stocks totally and just trade by the day because obviously there's opportunity that comes because we can't time when this is going to happen, but we can certainly prepare for the storm before it gets there. Stephen, any comments on that?
No, I mean, it makes you wonder when, people like Bezos and Bill Gates, I like the conspiracies, why they're getting divorced. And if you look at, how that's handled with money and what that allows them to then do with their wealth by transferring it, a lot of people think that those are planned and it's going to allow them to be able to sell a lot of stocks and get out of the markets that otherwise they would get in a lot of trouble for doing because of things like insider trading. And if you look back to like Enron, one of the only executives with them that did not get in a bunch of trouble was one of the ones that had gotten through a divorce and his wife took all the money. So he ended up not having, he ended up not getting any trouble because of it. So it just makes you wonder like why some of this stuff happens. And we know when Solomon comes on a little bit later and starts talking about the trust and the private foundations and why these guys do what you do, it's just, you compare it to what people are really doing in today's real world versus what you hear on the talking heads on TV, like you mentioned with, CNBC and Fox Business and all that. What are they over here telling you? Hey, it's great. This is a great market. Keep buying. Things are going to keep going up. What's the guy Kramer and all that stuff? Hey, keep buying. Let's keep going with the market. Well, guess what they were telling us all up until the collapse of 07, 08. It's a great market. Real estate's going to go up forever. Stocks are going to go up forever. And then boom, it collapsed. What happened to the .com, the talking heads on TV? Everything's great. This is going to go on forever. The internet's .com, the internet's the best thing that's ever happened. Boom, everybody lost everything. So when these guys are saying one thing over here, you got to kind of watch that sleight of hand. What's really going on behind the scenes and what are the big players doing? And you look at what's Warren Buffett doing right now? He's selling everything.
Except for a couple of pharmas and a couple of transportation.
Right. And Warren Buffett has built his entire career on holding stocks for the long term. He's cashing out right now. So you gotta watch the sleight of hand and follow what's happening in the real world. And that's exactly what Harry's laying out right here and why it's happening. The velocity's down, but the printing of the money is keeping the supply up. And it's right there in front of you in plain sight, but everybody gets distracted by the shining objects like crypto. Crypto's going crazy right now. Dogecoin and Litecoin and Ethereum and Bitcoin, and it's all-time highs. And I don't know, man.
Well, I think Harry talks a little bit about that. I don't know if Shauna captured that, but I mean, let's keep going with this. And folks, you're listening to this, you're hearing us kind of talk about this, and I'm sure it's raising some questions. Well, my advisor's saying, keep putting money in. My 401k, they're saying, keep putting money in. We got to buy for the long haul. That's what they say to do all the time, right? Well, maybe, but can you hold your positions? Can you hold all those stocks that you want to buy for the long haul through a 60% market crash? I mean, remembering that if you lose 50%, it takes 100% return to get back the 50 you lost. Any of you remembered last year when COVID hit, the market fell 35? Do you remember the market kind of, came back up in a V and has been going higher and higher, but people are just now, I talk to people every day. Like this might not be you, but folks, listen, right now, people are just getting back to even from where they were last year before the 35% drop. Well, how can that be?
Yep,
The market's way higher. It's called the drawdown effect. They lost 35 or 30%. It takes them 40 to 50% to get back what they lost. You don't understand that. But when you're working off of a smaller amount of money, it takes more return to get you back. And it always is working against you. That's what he mentioned with the velocity of money. So money printing and all this stuff. And we keep thinking, oh, this is unprecedented. They're just going to keep printing money. It's going to keep driving the markets higher. Absolutely not. The government can keep trying to print money because they are, like Cynthia said, trying to drive inflation, because why wouldn't the government want inflation? When they create inflation, it steals money from your current dollars that you work really hard for. It steals it. It's a hidden tax. Your dollar becomes worth less, which means, what does that mean for the government? It means the government gets to pay back their debt pennies on the dollar. If the dollar's worth less, and the dollar is what the US government uses to pay back their debt in the future, if they drive inflation, can't they pay debt back with cheaper dollars? Absolutely. Wouldn't all of you like to pay your Visa back 50 cents on the dollar? Well, do you think the government's dumb? They know that inflation is their only path to being able to do that. Let's dive back in. Anything you wanted to say, Stephen, before
we got a couple questions, but let's go through the video and then we'll start hitting questions after that.
Awesome.
1929 to 32. Now, again, nobody expects this. Oh, the government won't let it happen. The Federal Reserve, central banks won't let it happen. These are the ones pumping up our economy. They are shooting themselves in the foot. The more you pump up, and I don't care what balloon you have, there's a point where it'll pop, okay? You keep blowing it up. They're the ones blowing it up way against the reality of a slow economy. And they're the ones setting, so it's going to have to burst. And let me put the most important number in the world economy. And I've probably got to look this up. It's probably 10 trillion higher. $525 trillion in financial assets, real estate, stocks, bonds, that sort of stuff. Now, the more important ratio is that 6.5 times global GDP of about 80 trillion, okay? So it's normally 2 times, okay? Maybe 3 at a stretch. So it's going to be the collapse of this 525 trillion that is going to particularly make who feel less rich? The rich. Homer Simpson's going to lose their job, some of them for a year or 2 or so, but the rich are going to lose the most wealth since more than 1929 to 32, because we have so much more wealth per capita, and it's so much more global now. Not just the US and Europe. China's got wealth. Southeast Asia's got wealth, on and on and on, even India and Africa and stuff. So this is going to be what I've been calling for a long time, the crash of a lifetime. The strategy is extremely simple. Get the hell out of the way of it. Continue to grow your money so that when this bubble collapses, the world is your oyster. You're going to buy any financial asset you want, any business you want to take over, any real estate. You should have your sights set on now what you really want to buy the most long-term for your life, your investments. And again, protect your money now, make solid income and opportunity, and be ready to pounce somewhere between late 2022 and 23. That's when I see a bottom. I have cycles galore, but it's a hierarchy. I know a lot of cycle guys. I don't even listen to them, frankly, because they don't have them in a hierarchy. You have to understand which cycles are most important and what's the domino effect. I got my 4 biggest cycles all pointing down into late 2022, and only one, actually a 5, pointing up gently. That is the most likely time for us to see a bottom and maybe a hangover after that into 2023. Now, from there on, you have the next global boom. Now, here's the other secret, other important. Number 1, don't listen to economists or your financial advisor. Okay? They're just not going to see this coming. It's not acceptable, and it would be bad to even say it. Well, somebody has to say it, so it's me, okay? The next boom is not going to be like this boom. This is going to happen in Southeast Asia and South Asia, which includes India and Pakistan. That's going to be the center of the next boom. And for any lucky people in Australia, I sell more books per capita and speak more relatively in Australia than anywhere else. These people have the strongest demographics in the developed world, where most people are either moving sideways or down for decades to come. And they're right on that Pacific Rim where all the action's going to be. In fact, it's not my favorite city, I hate to say it, in Australia, but Perth is the city that's sitting there. It's the smallest city part, growing the fastest, sitting there the closest to Southeast Asia and India, where the action's going to be. So there's huge opportunities, but the important thing is people just have to realize things have been too good too long. In other words, this boom, already the greatest boom in history, should have peaked in 2007.
So there you go, folks. That's Harry Dent Jr. And I'm just going to shrink my screen here because we've got another video we're going to play in a little bit. But I really want to take a couple moments and just tear apart some of the things that were said there. because that was a lot of information to unpack. There was a lot of golden nuggets there. And, a lot of people are just confused right now. If you look out there, you look in the newspaper, you just look around, we're coming out of what everybody thinks was a big lull, like the COVID. So like the government's printing money, businesses are opening back up, everything's good. Our earnings are blowing expectations out of the water. Like the last earnings reports, right? The analysts come up with their numbers. And then when earnings come out, do they beat the earnings of the analysts? They're blowing them away. 20+% more than analysts. But like, I want everybody to put that into perspective. He talked about that, but not in that little video. Right now, if you're comparing earnings last quarter or last year to where they are today, didn't the country just kind of open back up outside of Florida, which never really closed? Didn't the country just open back up? Weren't we just let out of our cages and allowed to go back out and actually have a cocktail or go out to dinner and talk to friends where we don't have to be 10, 15 feet away? 6, sorry, I know. But, didn't that just open up? So now people are actually coming out of their caves, their house, and allowed to actually go out and spend money. So that's, of course, helping businesses. That's of course making earnings blow up. Like outside of some of the FANGs that made money all the way through, most companies were shut down. Matter of fact, during the peak of it, all of them were shut down. So the fact that earnings are coming out and blowing away expectations, like ignore it. Don't even watch that on the news. It's not real. It's not hard to beat nothing. Right? If a business is closed and then the next earnings report, they blow away the prior quarter when they were closed, like, did they really make money? Well, they made more than they did before, which was pretty close to nothing. Like, you got to understand the ramifications of what are going on and what you're actually seeing, which is why Sodi, our full-time trader and the head of the 1010 trading, why he says, don't turn the news on, don't watch the news. It will make you make bad decisions. And he's absolutely correct. Harry Dent just said, don't listen to economists. He's an economist. He said, don't listen to your financial advisor because they don't know this is coming. Let me take you back to 2007. Stephen, you can relate to this. You were an advisor. We didn't know 2008 was coming. All of our consultants, the best and biggest mutual fund consultants, the best and biggest separately managed account fund managers in like Morningstar and all the big guys, okay? All of them, Rothschilds, we're all saying, oh yeah, the market's doing great. Keep going in, pile in, put your money in. And then boom, it collapsed. How did they not see that? Is it that they didn't see it or they had blinders on because they only saw profits? What do you think about that, Stephen?
No, I mean, it's spot on. It's, the world doesn't realize things are happening until it's too late. And all you gotta do is study a little bit of history and study a little bit of, what's going on right now in the real world. And, it leads all to the same place, exactly like Harry's saying.
So let's go to some of the questions, some of the audience here. So, we've got a couple things. Spoke to a friend today about IBC. Thanks for sending them our way. Okay, that's awesome. Okay, there we go. Take the 60% plus decline in the stock market and the dramatic loss of the value of financial instruments and imagine what the result will be for banks. FDIC can't cover all. Oh, Jim, you're absolutely right. Go on YouTube and subscribe to my YouTube channel at the Chris Naugle and watch that video I started playing at the beginning of this. Bully, listen, banks will fail. Banks failed in 2008, 9, 10, 11. You guys remember that, right? Do you remember the news? WAMU going belly up? Do you remember all the investment banks that went belly up? Or maybe you just didn't remember, you don't remember that because, it's so easy to forget about these tragic events that happened. After they're done, we forget all about that. Banks will fail again. Because banks are the risky drivers. You ever been driving? Listen, you're in Florida, Stephen. In New York, we all are good drivers because we have to be because everybody's crazy here. But in Florida, like there's a lot of bad drivers, man. When I'm in Florida driving, I'm like, there's people coming in my lane, people coming on the on-ramps, not even turning blinkers on. Like, no wonder Florida has more accidents. There's a lot of risky drivers in Florida. Well, there's an awful lot of risky drivers out there right now. And that is what you need to be scared of. Banks, risky drivers, most all of them, okay? They just take excessive risk because they just want returns for their stockholders. They want their big returns, their big profits. Man, it's frightening.
They also have a little cushion there with the thought, because it's happened, that they'll get bailed out if they make the wrong investments.
But they will, because they already—
what do they have to lose? So they might as well be risky,
Good point. Good point. And, let's get over to some of the Q&A. So Dustin said, what should I do with money I have in my IRA? Do you want to try to tackle that one a little bit?
Yeah, I mean, so there's a couple of things to think about with that, so if you think that things are going to come down, first off, can you weather that storm? A, and B, do you want to weather that storm? Is it worth it to you to go down with the market and then wait for it to come back? Or would you rather, do like Buffett says, buy low, sell high, and don't lose money? So if we're at all-time highs right now, what I look at, this is the way I evaluate, is what is my upside risk versus what's my downside risk, or what's my upside reward versus downside risk. So if we're at all-time highs right now and we're expecting for a drop to come at some point, you got to ask yourself, how much higher can those prices go before that downturn occurs? And is it worth risking that little bit of upside potential to miss the timing of it and have it coming down where I'm too late? Okay. So to me, it's a good time to start exiting. Okay. Getting out of stocks, getting out while they're at all-time highs, and looking for alternatives. Okay. Because the downside risk to me is far, far, far greater than the upside potential where we're at right now in what is today? May 5th, Cinco de Mayo. Happy Cinco de Mayo, by the way. I'm gonna have to get up.
Absolutely.
I'm gonna have to run to the store and get some Coronas before the Ask Me Anything. But anyways, so May 5th, May 5th, 2021 right now. So, Harry Dent says end of 2022, beginning of 2023, sometime in there. Everybody else that I read and study has very similar timelines. Yes, I love Modelo also. So right now might be a good time to start exiting, right? So what do you do then? Can't have your money sit in cash. We're going to lose there because of inflation and, everything else. So what do you do? So that's what we're going to talk about today. That's what the Money School Essentials training is about, is what are your alternatives to the stock market? Or if you do have to remain in the stock market because of, let's say, a 401k, how do you protect the money that's in the stock market through other strategies we teach during the 3-day, which is what Sodi does with the hedging of stocks, which Harry Dent actually talked about as well on another part of the video that we didn't get to today. So if you're going to stay in the stocks, make sure you quote unquote buy insurance through hedging of that money you have in there, or let's get it out, take those profits off the table, and let's reinvest into alternative assets, things like real estate, that are going to allow you to control that money a little bit more and avoid some of these downturns. Because and we can get into what's going to happen with real estate. I don't want to jump in quite yet, but real estate's typically going to be a lagging drop, right? So the stock market's going to come down. We're going to see mortgages, tighten. We're going to see interest rates do what they're going to do. And then real estate will sometime follow. So it gives us some timing. So then the question becomes, what type of real estate do we invest in? And that's a big, big, big part of what we teach and what Private Money Club is all about. So I definitely want to get into that right now today too. What type of real estate is good to look at right now? So
I like that. That's good. And, I was just drawing as you're saying that. So if this is the exit, at the top, makes kind of sense, exit at the top, but people don't do that because they're like, oh, well, it's not here yet. Oh, I'm going to miss out on the returns. I had somebody on Duck V's show say, Chris, if I took your advice last year, I would have missed all this upside. And I said to him, I said, what upside? He said, all the upside that, has happened in the market since you said, get out of the market. And I said, I never said get out of the market and do nothing with the money. I said, invest it smarter in safer places. So what are those safer places? What do I do with my IRA? Okay, you could hedge if you can't get out of it, 401ks, you could hedge against it. You could do alternative investments. So what are alternative investments? Well, like Steven's talking, maybe some types of real estate. Not all real estate is going to be good because remember, there's asset bubbles. What are other alternatives? How about oil? How many of you think oil prices are going up? All of you. It should be 100%. There should be no question from any of you that oil is going up. So if oil's down and going to go up.
Warren Buffett does.
Yeah, exactly. So why would oil go up? Well, think of why lumber just went up. Okay. Why did lumber just skyrocket? Don't you dare tell me it's inflation, because that is absolutely not why lumber went up. Lumber went up because supply and demand. There is a lot of demand for lumber right now, a lot of housing being built, but the supply, which mostly comes from Canada, is shut off. So getting that supply delivered to the demand isn't happening. The same thing's happening with meat. like I'm vegetarian, but meat just went up 50%. If you haven't noticed it yet, get ready. It's going up. Supply and demand. Why would meat have a problem? Well, people don't want to work. I mean, the government has made it so simple for people to sit on their couch and not work. They get paid more. So why would they go to work? Well, how are people going to fill those lower paying jobs like meat packers and all this? They can't. So the supply is the problem. So oil would be a great alternative. What other alternatives are good? How about private investments? Okay. Investing in companies. Okay. Private equity. Now that's tricky because you got to kind of know what you're doing. But if you're part of Private Money Club, you're in the know. All right. So private equity. What else is that? Well, you could do, I mean, some people are talking Bitcoin. Okay. You could do Bitcoin. That would be one. Okay. Alternatives. I mean, gold or gold mining. I mean, yeah.
Yep. Gold or precious metals. I mean, even treasuries like you talk about. I mean, that's kind of more, traditional still, but in this kind of market, it's an alternative that seriously needs to be considered.
So how much should go to alternative investments? I'll tell you from, none other than Ray Dalio, 15%. 15% of your portfolio should go to alternatives. Okay. So there we go. We got that out of the way. But what else could you do with your money? Like everybody's afraid of cash, but isn't cash king? Yeah, but Chris, they're creating inflation. It's depleting my dollars buying. Listen, your dollar, the US dollar, is still the nicest house in an ugly neighborhood. It's still the best currency out there. There is no other currency better than the dollar. And anyone that's thinking Bitcoin or any of the cryptos are the currency of the future, they're not now. So we can only focus on what is. It's the best house in an ugly neighborhood. So cash provides an opportunity for you to keep money in a safe place and redeploy that money. Okay, where else should put money? Where else could we put money? Well, you heard him. He didn't talk there, but he talks about U.S. Treasuries. So real quick, and I'm going to knock out a couple of these. So, what should I do with my money? Dustin, should I sell my home? Well, Dustin, that's a tough question. I mean, I don't know. I mean,
well, let's talk about what kind of home, right? So if you live in a house, if you move, you're going to have to either rent or buy another house. If you buy another house, you're paying, you're selling to get out a high and you're buying at a high. So what's the point of doing that? If you rent, you're back to renting. And I don't know about you, but I'm married with a kid and my wife would never let me do that. I mean, so that option is kind of out. So if it's your own home, maybe make sure you're in a good area that, you think is going to maintain high prices. Where I live in South Florida, even with a huge downturn, I don't see it dropping too much because of the demand of where I live so close to just everything that Florida has and where I am specifically. But, so it depends on the house. Now, if we're talking investment homes, I know what you're doing, Chris. I know what other investors. I mean, my business partner had a long conversation with him. I mean, he bought a home a few years back for $100,000. It's at $260,000 right now in value. He could sell it for right now over in Cape Coral, Florida, which is crazy money. This is back to like 07 levels that make no sense. But so he could sell that right now. So we had that conversation actually yesterday. What is the upside of that? Like if you hold on to it, the whole point of rentals is, okay, you have income coming in through rents. That's fine and dandy. You might make a couple $100 with the spread, or you might make a little bit of money, but you're dealing with vacancies. You're dealing with tenants, toilets, and termites, right? So it can become a headache, but you do it because you do have that little bit of money coming in and you have that upside equity potential when the home grows in equity, right? But at all-time highs, where's that equity potential? It's not there. So why deal with the headache? So we had the conversation, why not cash out of some of these higher priced rental homes right now where we can get the equity, we can put it into a private type equity and a private equity like we were talking about before with the alternatives that pays 10, 12%. You're not dealing with any of the headaches. You have great money still coming in every single month. You don't have to deal with it. And then when things do come down and correct a little bit, you can rebuy those homes and go through the whole cycle again and get all that equity again. That's how wealth is created. So it depends on the type of home, but if it's your own home, that's kind of one of those things you got to.
That's a tough one, Dustin. So you really got to look at it. Like just recently, and me and Larissa, it's not inked yet, but we are moving. We just bought a new house and we are selling our existing house and we got top dollar. I already have a buyer for it. And he paid more than I think anyone should have ever paid for my house, but I'm not complaining. But then, I went and I bought another house at the top of the market, but I didn't just buy another house at the top of the market. I found the nicest house or the nicest neighborhood, and I bought the cheapest house, the house that needed work, the house that had the distressed seller. Oh, it took us forever. It took us months. I had to deal with my wife taking me and dragging me out every weekend, looking at houses, making offers, getting turned down every step of the way. Finally, we got an inside scoop on this house that I wouldn't even go in. We drove by it every single weekend. And I'm like, that house is yellow. I'm not going in it. Nope. Don't even ask me, Larissa, we're not looking at it, but just look at the kitchen. No, we're not going in it. And finally we went in it. And I took the blinders off of like, I'm buying a house for myself. And I put the investment blinders on. I said, wait, we can paint the outside. We can change the kitchen. We can change all the things that we don't like. And if we buy it at this price, we have a house that instantly has a bunch of equity based on what houses in this neighborhood are selling. So you see, it took a lot of time, a lot of energy to do. It's not easy, but that's why I'm doing what I'm doing. And I'm selling all my rentals for the exact reason of Stephen. I'm going to sell at the high point. And then you think I'm not going to buy back in? I'm going to do it different the next time. But heck yeah, when real estate starts going down, I'm going to start adding more of these little houses. But you know what I'm adding right now? Mobile home parks. And all of you have a very unique opportunity, especially Private Money Club. Our mobile home park fund with me and Chris Rude and Michael, it launches literally in a day or two. We're literally waiting for one final thing. We got the name, the website, the domain. We're already taking calls for it. It's open, folks. You can make between 7 and 12% depending on how long you want to invest your money. And I can say that because I'm a partner in the fund. I'm the only one that can talk to you about this fund because I'm a partner in it. So therefore, it's a private SEC registered fund. It's a Reg D, and anybody with 15,000 or more that's accredited can have a take at that in the Private Money Club. It's got to be friends and family, folks. And you know, this is a free webinar. Private Money Club, those are our friends. You just got to get in the know and get in the club where all these offerings are. So that would be that. But you know, I mentioned treasuries. You know, I keep always talking about these boring US treasuries. Oh my God, why would I want those? Tell your advisor you want to buy US treasuries and see what he says. He'll tell you you're absolutely batshit crazy. But let's really look at how crazy we are. If any of you watching this, I don't care if it's Cynthia or Shauna or Paul or who was we had a 23-year-old, Evan, listen very closely, and everybody needs to listen. US treasuries, and let's focus primarily on 20 and 30 year. Now, I want to debunk this. When I say a 20 or 30 year US Treasury, I know your little indicators in your mind are saying, I don't want to invest in something for 20 years. I don't want to put my money in something I can't get for 20 or 30 years. Stop it. Of course you don't. Nor do I, nor does anybody. Maybe an insurance company, but we don't invest for 20 to 30 years. It's just that's the guarantee period that the US government puts on those bonds. And does everybody understand what a bond is? So Stephen, I'm going to explain a bond. I've got $100 that I want to invest. Stephen needs $100 for his business. I lend this $100 to Stephen in the form of an IOU called a bond. Stephen takes my $100 and says, Chris, I will pay you 2.2% interest on your bond. And I just collect checks on my $100. Now, when I want that $100 back, I can either wait for that bond, that IOU to mature, or I can take this bond, because now I'm holding, let's just say this is the bond, the certificate. I can take this certificate and I can go to David and I can say, hey, David, I've got this great bond that I bought from Stephen's company. It's paying me 2.2%. I paid 100, but I'll sell it to you for 103. And David's like, well, that's a good deal. I'll pay 103 for that thing. Why would he pay 103 for something I paid 100? Well, why would you pay more for Apple than the prior guy paid for Apple? It's the same idea, but let me explain bonds. So we know that the market's going to go down. So won't bonds go down when the market goes down? Some will, but US treasuries will not, because follow with me. Here's how bonds work. Okay, I'm just going to do this. If interest rates, which is right here, okay, if interest rates go up, let's just write this. So this is interest rates. And does anyone think interest rates are going up? Oh, if you watch the news, you know they are. Janet Yellen just said we have to slightly, or whatever her word was. I don't believe a word out of her mouth, but she said slightly raise interest rates to kind of curb this really fast growing economy. So what are they doing? Well, what all of you don't know is the Fed has been raising interest rates. We went from zero, close to zero, just a year ago, to now we're at about 2 to 2.3%. So you can buy a US Treasury and get paid 2.2%, and they call this the yield, okay? Or in some words, their coupon. So Stephen, this is in coupon, just think of it like every month, Stephen's gonna rip a coupon out of a coupon book and send it to me with a check for 2.2%. Now, if any of you get excited about 2.2%, we should have another conversation because that shouldn't get you excited. But what I'm going to tell you next will. If interest rates are going up, what happens to the price of bonds? It goes down. Interest rates are going up, the price of bonds are going down. And if Stephen, on your computer, can you just pull up, just Google TLT and pull up a chart for 5 years? And in a second, I want you to share that, okay? Because I want to show everybody what I mean when I'm explaining this with visuals. Because you guys can hear me talking, my lips are flapping, but maybe visual will help you. So Stephen's going to pull up the chart for a 20-year bond. Okay, it's an ETF, but it's the same difference. And I want you to see the relationship of what's happened from last year to this year. And whenever you're ready, Stephen, just pop that sucker up. From last year to this year, of interest rates going from close to zero to where they are today of about 2%. And if you think that interest rates are going to keep going up a little bit higher, I want you to think of what will happen. So go down in the chart and just click 5 year. Yeah, they'll do a 5 year. Okay, and then if you can blow that chart up, is that even able to be blown up? So everybody, I want you to look at that. Stephen, just focus over on the far right corner right here, okay? See that like up here was really high, 2020, when the market collapsed. Shouldn't this have went down if it follows the market? It didn't, it went up. Look at the dates, okay? There's March, go back down to when the crash started happening in February. There you go, okay? January, February, look at that. Went up and up and up. And now, okay? Now things started getting back to normal, and you come over here and you look at what's been happening. There you go. So there, boom, 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 all the way down. Isn't that a buy signal? When something goes down, isn't that when we want to buy it? So it's going down because interest rates are going up. So the price is going down. Okay, so now we understand that. Now, Stephen, go back, do the max chart. And just focus in on 2009, okay? Right around there. So now what will happen is let's reverse this, okay? So now if we know that if interest rates go up like they are today, the price goes down, which creates a great buying opportunity. But now let's reverse this. What happens 2021, 2022, 2023, whenever the market drops, if we just look here, what happens to interest rates? Okay, when the market drops, the Fed does what? The very first lever they pull is they reduce interest rates. And if the Fed drops interest rates from where they are now, 2, down to close to zero where they were just a year ago, what would happen? Well, let's look over here to 2029. And if you look where they pulled interest rates, okay, that was when the markets were falling, okay? Actually, I'm sorry, right, you got to go back 08. Where's 08? That's 2009. There you go. That's what we're looking for. So that's 2008. And then you got 2009. See the price spiked up? See that big spike in 2008 and then into 2009? The reason that happened is the market went down. Interest rates went down. The price of bonds went up. You can see it happening. You can see it happening just last year. You can see it happening in 2008. And if we went back to any other period of time, you'll see the same thing happening. When the Fed drops interest rates, the price of the bond goes up. So how much, roughly, would a 20 or 30-year bond appreciate? How much would the price of that bond go up if the Fed pulled rates from right where they're at today, 2.2, 2.3, to close to zero where they were a year ago? I'm gonna write it really big, folks. I want you guys to see this number. 30 to 40%. And you guys did hear me say that U.S. Treasuries are guaranteed by the full faith and credit of the U.S. government. So you can put your money in an asset that is technically going down because of interest rates going up. You can put your money in that, and then you can sit there and wait and collect that coupon, that boring 2.2%. But then when the whole thing collapses, if the rates go from where they're at today to almost zero, says Harry Dent, you could potentially make 30 to 40%.
Isn't it 30 or 40% per percentage point in change?
I think so. I'm just being super conservative here, Stephen. I'm just trying not to get people too excited, but I think you're absolutely correct. Per percentage point of drop, I think you're going to see that kind of an increase. And if we really studied that chart, I bet you that's what you'd see. It's probably a 20 or 30% increase in price every percentage point. So if we went from 2 to 0, that's 2 percentage points. That's like 60%. I'm just trying to get you guys to see the inverse relationship, that you want to buy assets that are going down in price instead of assets that are going up. And then you want to sell assets when they're going up, not going down. It's the opposite. So everybody's buying stocks, you should be buying treasuries. Everybody's rushing into the market, you should be rushing out of the market. I'm just saying, sometimes doing the opposite of what everybody else does is smart. So Evan, you're 23 years old. Okay. You want to balance investing in real estate, Roth IRA, starting my first infinite banking policy. So let's talk about infinite banking policies over here. What do you do if you think this is coming and you want safe money, but you still want control of your money and you want to have access to it? I don't even feel like we need to say this anymore. Privatized banking should be the very first thing that came to your mind. Those stupid, specially designed and engineered whole life policies that we set up, they're guaranteed, folks. They're guaranteed to pay you an interest rate. They pay dividends every year for hundreds of years. You have access to take your money out and use it while still making interest. I'm not here to talk about privatized banking, but if you didn't already think that was a good place to put your money, then I don't know, the freight train kind of already left the station. Like that already should have been in the whole portfolio. What other ones we got here, Stephen?
Yeah. So, what do you think about futures for lumber now that the Canadian border is opening back up?
Futures will go down because the supply will start coming in to fill the demand. And as the demand starts getting filled, you're going to start, you see, listen, like things are going up and up and up because there is that demand, but eventually when the supply comes in for the demand, it'll level things out. Do I think lumber is going back down in cost? No. She's talking about futures, like that's a whole different animal, but no, I don't think the price of lumber is going to come back down much, but it's probably not going to go up much more now that they're opening the borders. Good question. How do I know Warren Buffett's selling everything? Just it's public record. He has to disclose that. He's an investment manager. So you just look up Warren Buffett, you go on YouTube, search Warren Buffett's selling. I mean, it's public.
Look at Berkshire Hathaway and
that's
all the disclosures. Yeah,
Berkshire Hathaway is Warren Buffett. Look at what they're selling and what they're buying. And how come you haven't seen Warren Buffett in the news lately? Because I remember 2009, 10, 11, 12, 13, 14. Gosh, Warren was in the news every day. The man was buying this and that and this and that. Why?
Sorry, Shauna just put a really good video too. If anybody wants to watch that YouTube later on, click that now and save it. It's Warren Buffett talking about what's going on.
Absolutely. So right there. Let's see. Shauna said, do you think the talking heads, as you call them, pump up the stock market in the media so that people who don't know what they're doing do so? And let's see, quite some time, aka the ultra wealthy, have the opportunity to sell. Of course they do. I mean, listen, let's talk about the ultra wealthy, the people that are in, that control the mutual funds, that control the market and have a lot to gain by propping the markets up. Do you think they're doing that? Of course they are. Do you think they did that in 1929? Watch the video, folks. On my YouTube and in my Facebook, I posted a video about the 1929 stock crash. Okay. The market crashed in 29, but then rebounded tremendously, just like it did last year. And it did because the ultra wealthy kept plowing their money back into the markets to prop it up because they had something to gain, or ego. Could be both. So Shauna, absolutely. That's exactly what they're doing today. It's the same thing they did in 1929, except for back in 1929, the prop up was done by ultra wealthy bankers. The ultra wealthy that is propping the market up today is none other than our US government, the Federal Reserve. The biggest freaking criminal in the whole thing is the Federal Reserve, and they're propping it up. But also the wealthy are doing that. The hedge funds are doing that. I mean, remember the GameStop thing, like just follow the cue.
Yeah. I mean, every time you hear of one of these crashes, what do you hear right after? That was the greatest transfer of wealth in history. Where is that money transferred to? The wealthy, because they are out when everybody's buying, and then they buy back in when everybody's scared and selling. It happens every single time. And, money's not, money's created these days with the money printing, but historically speaking, money's not created. Money is just transferred from one place to another, from one person to another. So you want to be on the right side of that. But the problem is, and why 95% of people, according to the Social Security Administration, are not able to retire in the way that they want to, is because they're never on the right side of that transfer when things happen. Unfortunately, psychology comes into it, emotion comes into it, and just pure uneducated advice. I mean, most financial advisors are great people, but they learn what they're taught by their bosses, by their brokers. Who are their brokers? These big companies that make trillions of dollars that are protected. They make money by selling this stuff. They don't really, and this sounds horrible, but these people at the top, they don't care what happens to you. They don't, okay? They want you to buy everything, because how do they make money? When you buy. That's all they care about. That's all they want for their stockholders. That's all they want. So they don't care. They want them to, so they don't care what happens to you later, because they see that as, hey, if we get stuck in the middle of it, we'll get bailed out. Hey, if we, we'll be fine because we're in a position where we're ready to rebuy. Like, it's just the way the world works.
Absolutely. So, you just got to sometimes just do the opposite of what everybody's doing. And it's a tough thing. It's really tough. I had somebody in today, and, I work with, locally, like, it's nice because people can just come in, but all of you are finally going to have the opportunity to actually come be with us in person for our first event, which is coming up in a few short months. We have an in-person event called Inner Circle. We'll talk about in a second. So I had somebody come in today, very, wealthy individual, one of the most affluent families around this area, and they had a problem. They had gotten a bunch of money. Okay. Lots of money, and they needed guidance on what to do. And they went to their financial advisor, who was a trusted family friend. And their advisor, told them all the things that I told them he would say. And the advisor wasn't doing anything wrong. He was doing what he was taught. And I just said to this client, I said, listen, I said, who cares more about your money, you or the advisor? And he said, him. And I said, okay, well, if you care more about your money, let's just figure out how you can be a good steward of your money. And we came up with a simple strategy on what he can do based on everything I'm telling you and everything I've learned. And it is simple. You don't need fancy advisors to tell you. You don't need separately managed accounts to tell you what to do with your money. What you need to do is figure out what's important to you. Is it important for you to protect your money and not lose money? Great, simple. Get out of the market. Is it important to you for long-term wealth building and you can accept losses like a 23-year-old like Evan? You might want to stay in the market a little bit, but I still would question, are you okay losing 60% when it's going to take you got to make over 100 to get back where you were? Are you willing to ride that roller coaster? Or should you get off at the top of the mountain, wait for it to go down and buy back in? I'm not saying time the market. That doesn't work. I'm just talking about simple logic. It doesn't take any kind of market timing to understand that we're at a high point and it would make sense to buy at a low point. I didn't say the highest point and I didn't say at the lowest point. You'll never get that. But if you sell at the high point and you buy lower than what you sold at, folks, that's what's called making money. And I've never met a person in my life that was upset at making money. I've never met a person in my life that when the market was falling and they were only making 2% or 4%, like those stupid whole life policies, that was upset. Steven, you ever met anyone upset at making 4% when everybody else is losing 30?
Never.
Never in my life. Matter of fact, I've never met a single person upset when they're making money, period. And it doesn't matter how much they're making, but when they're losing, I've met a lot of really upset people. Losing money sucks. It's not fun.
Yeah. And the fact is somebody will be that top tick. Somebody will be the very last person to buy at that top before the whole thing comes crashing down. And we just don't want that to be you, please.
100%. Audra said, do you do strategy sessions with getting started and setting realistic goals? Absolutely. Stephen, put your email in, set up a strategy.
Yeah, Audra emailed me actually. She just started a policy with Brent and she's just looking at, how much she should put in and how much she wants to be able to invest and what to do with it. I believe she was at our 3-day in March. So yeah, Audra, we have never spoken. So again, you can go attend these 3 days, but unless we talk afterwards and you implement these strategies, so better late than never. It's been a few months, but you're coming on board now. So I'm excited. So yes, absolutely. I have your email in my inbox. And I know we were going back and forth. So the next step will be to set up a call and let's get that policy money. Let's get whatever else you got going. Let's get that money in motion and get you taking advantage of all this.
100%. And then Jennifer said, can you fund the mobile home park with Chris Rude, be invested in through a self-directed IRA without an LLC? Yes. And yes, Jennifer. So you can invest in the mobile home park fund with a self-directed IRA with a solo K. Go ahead, Stephen.
Well, I was saying that's what he was asking earlier about what to do with the IRA. And so a typical IRA at Fidelity or Morgan Stanley or somewhere, or, anywhere, Vanguard, whatever, they're not going to let you invest in this stuff that we're talking about. So you have to transfer your money. Now, doing a direct IRA transfer, there's no tax consequences. There's no penalties. There's no tax what's it called? It doesn't trigger any tax events happening. So you just transfer from one brokerage to another brokerage. So we happen to all use a company called Horizon Trust Company. That's a self-directed company, but there's other custodians out there. But yes, you want to move your money to a self-directed. And then with that, you can invest in things like the mobile home park fund, private equity, private lending, real estate, etc., gold, silver, all the alternative assets. And one we missed to write on there earlier was notes. I still think notes are a great investment.
I think notes are great. Kevin Shortell does notes. I think they're fantastic. So a lot of people are, we've had tons of interest in the mobile home park fund. It's only a $4.5 million fund. We'll probably do another one after this, but we're testing it. $4.5 million, literally, we'll probably oversubscribe that or subscribe to our limit in a month and a half. So time is of the essence. If you're interested, you got to get into the private money club. You got to talk to us about it. I'm the only one that can really openly talk about it because I'm a partner in it. So it is not guaranteed. I just want to be clear. It's an investment, all transparencies and everything else. It's an investment. You can lose all your money, blah, blah, blah. Okay. Anyway, back into it. It's called the Safari Fund. So we've been dancing around with the name, but it is now official. Safari is the name of this new fund. So when you think of the mobile home park fund, you can call it the mobile home park fund, but for us, we're calling it the Safari Fund. We kind of just liked it, right? I can't wait to get out and see the lions and the critters out there. So it's going to be the Safari Fund. And the lions and critters, just so you know, are the people that live in the mobile home parks. Just saying. Okay, 12 months, you can invest and get 7%. Okay, interest only payments, we pay monthly. 24 months, 9%. 36 months, 12%. The minimum investment's $15,000. You can fund yours with your privatized banking. You can use your self-directed IRA, on and on. So that's the first part of that question. Second part. So if you're not an accredited investor, can you do the investment? That's a maybe. So Jennifer, what I would suggest is getting on the phone with Hershin to talk about what that actually means. The qualifications for accredited are pretty simple. Get on the phone with him and he can explain that and he can talk about it, but I wouldn't rule yourself out right away. Get on the phone and do that so we can set that up. So Rock said, you aren't saying invest in TLT though, right? Always somebody that says, I can't give investment advice. I'm not making any recommendations or suggestions on what you should or should not buy. But what I will tell you, Rock, is I am buying TLT. Yes, it is in all of my portfolios, from my TD Ameritrade portfolio to my Charles Schwab and my self-directed IRA portfolio. I own TLT. I'm not recommending it. I'm buying it. So you can take that for what it's worth. All right. And Harry Dent's also talking about it. So what do you think of buying crypto or stocks in a whole life cash value policy? So in other words, Sarah, you're saying like take a loan from your whole life to buy crypto or to buy stocks? Well, I just like I just said a second ago, I certainly am not buying stocks right now. Unless I'm trading the 10-10 strategy, which is literally in and out like lightning, like I'm not trading stocks, okay? I'm exiting stocks. So I would probably say, can you? Yes, absolutely. We've got the Tale of Two Traders video that shows how we do that. But crypto, I think crypto's got legs, folks. Do I think it's going to have some big pullbacks before it actually finds its ground and really climbs, to the heights that we hope, which, some people are saying it should be $1 million, and it very well might be with Bitcoin. There's only so many coins, but I don't know. I mean, but can you invest in that through your cash value? 100%, and you'll make money twice.
And let's make a clear distinction here. First off, so a self-directed IRA, the money in that self-directed IRA itself is the money that you're investing. All the, the money comes out of the IRA, all the profits go back into the IRA, and all the growth within the IRA is either tax deferred or tax free. The money within an IBC plan, within a life insurance policy is 4% guaranteed plus dividend. And that's the insurance company that gives you that. What she's asking is the cash value of that IBC policy, of that life insurance policy. What do you do with that? So you're not actually investing the money inside the life insurance policy. You're taking loans out and you're investing that money from the cash value. And that money you can invest in anything you want to. So whatever your strategy is, whether that's stocks, whether that's crypto, whether that's real estate, whatever that case might be, those are, the world is your oyster on that. But I just wanted to kind of clear that up. You're not actually investing the money in that insurance policy.
Absolutely. Yep. So here's the thing, I would be remiss, like a lot of what we're talking about is we're talking about, the 3-day event that some of you were at, but many of you missed. So I'm going to put up the link for the next one. The next 3-day event is going, and this is going to be the last one for a while. We're doing it June 4th, 5th, and 6th. Okay. The next 3 days after that won't be till September, like it says. And then we also have an inner circle, a live event. We only, I think, have 4 seats left. I think that's it, because we only hold 12. We have 4 seats left for the live inner circle. But inner circle, let's be clear why you would want to come to the inner circle. You would want to come because you're serious about private lending. That is it. Either you're a borrower or you're a lender and you want to learn more about private money, how to be a lender or how to be a borrower. That's why you should come to Inner Circle. It's an amazing event. Been doing that event for 2 years. It is in person only. So we have 4 seats left. And Stephen, can you put the link up for Inner Circle if anyone wants one of those 4 seats? It will sell out. It always does. And then the most exciting event that we have coming up, not to sound like a commercial here, but is the experience. It's an event. I don't want to call it a mastermind because it's not. It's an experience. You are going to come in and experience something that you will never experience again in your lifetime. I promise you, it won't happen again in your lifetime. It is at my house. So you get to come and hang out with me and my mentors. To name a few, you're going to have Randy Garn there. You're going to have, oh God, I'm not even going to get into the names. I don't want to spoil it. Go to the link. We'll put the link up, and you guys, that event, only 25 people. And I think we've already got 5 of those tickets sold. Can't hold any more than 25 in my house. So believe me, like, I'm not just saying it's 25 and I'm not just saying it's 4. That's it. So you come, you hang out. We're going to spend 2 days and 1 evening. We're going to wine and dine you, professional. We're going to have cooks, or what do you call them? We're going to have chefs. We're going to have professional chefs making all of your food. We're going to have taco trucks. We're going to have a day on the lake. You're going to meet and be around multi-millionaires. How much? Almost a billionaire. I just can't say he's a billionaire, but he's like 100,000, or I'm sorry, got to get up to the billion. He's a smidgen under a billionaire. You're going to get to literally rub shoulders with him, be with him, hang out in canoes, do whatever we do those 3 days. And there's one special event at the experience that I can't tell you, but that is the one that will be a experience of a lifetime. We spared no expense. I promise you. You guys got to check that one out. There you go. Lori said, I'm already there. So the other thing I want to do real quick is we've got another video. So it's one thing to make money, folks. We just told you, like, the market's going to go down. This is a huge opportunity for all of you to capitalize, to become wealthy. But the biggest problem with wealth is most people can make it. They can't keep it. They give it away to inflation. They give it away to taxes. They give it away to risk. They take stupid risk and make bad bets and make bad decisions. But what we're going to show you next is a bonus speaker that we had at the 3-day. Shauna cut this one up. This was amazing. This is literally a secret taken straight from the elite. Not the wealthy, I mean the elite. And this is something, it's not applicable to everybody, but if any of you pay a lot in taxes every single year, I want to be very clear what this is for. If you pay a lot in taxes, and you're often sitting there saying, why do I pay so much in taxes? Maybe you're a high income earner, maybe your investment assets make you a lot of money, and you're just thinking, oh my God, why is it that Trump and Warren Buffett and Bill Gates and the Clintons all pay less taxes than I do? What do they know that I don't? Well, that's what we're going to get into, folks. And then we're going to open it back up for questions, and we're going to kind of close this thing out with the rest of the questions. So let me cue this video up. You guys are going to love this one. And this absolutely was a bonus session that we weren't going to share, but we are right now. So here we go with this. Get it to play.
Cynthia, yes, we'll be in touch.
Sorry, computer's being a
Cynthia asked, do we want to hire a massage therapist for the event?
We actually already have somebody coming in and doing an event very similar.
Whenever we talk about creating generational wealth, we dismiss it by thinking that that is something that only the ultra wealthy, uber wealthy can do. And as mere mortals, that's off limits to us, and it's not. So when people come to us, they have experienced a certain level of success. So what we help them do is we show them strategies as to how to retain most of what they make legally. There are anywhere from 74,000 to 82,000 pages in the Internal Revenue Code, which is the tax law of the land. Tax laws are changing almost on a weekly, monthly basis, as you know. But there are only about 22 pages that are dedicated to tax laws pertaining to complex trusts and private foundation. These laws have been on the books since 1913, since the IRS was created. The 1040 tax code, which most of you are familiar with, the default tax structure, and then 1041 tax structure, which is elect to be a part of. Complex trusts are independent entities. However, the only one that works really effectively and efficiently is the complex trust. There are more than 80 different types of trusts in America. When we say trust, most people think that a trust is a trust is a trust. Not so. But IRS, to simplify everything, divided all of these different types of trust into three categories, actually. So a combination of complex trust and private foundation is what creates this, is the basis for this tax planning, actually. So when I started in the tax industry some 31 years ago, everybody told me that you're so fortunate that you have this opportunity to not only help yourself and your family, but your family as well. You must pay your fair share. And I always said, absolutely, yes, I agree with it. I must pay my fair share. The question is, what is my fair share? What dollar amount could be considered a fair share? And I've been a student of tax law for 30 years, and I have not found fair share in the tax code. But okay, let's look at our business leaders, let's look at our political leaders, and see how they determine their fair share, right? So some food for thought, basically, as to how some of our political leaders have decided what their fair share is, right? First clip was about Mitt Romney, right? Very successful person. And as always, journalists were after his life, release your tax returns, release your tax returns. And he never released his tax returns, but he did release his tax projection. And in that income and tax projections, he projected that his annual income was going to be $20 million in passive income. And the tax rate that he projected was 13.9%. He was CEO of Bain Capital, and he held the majority shares in that company. And that income is normally treated as ordinary income. How come that is not shown on any of his projections? Why is that ordinary income is not there? So if you, receive dividend incomes from any stock holdings that you have to report it on 1040. How is it possible for someone in his position to be able to not report that? And if he did report it, where did he report it, right? So that was one question that came to mind. The other one was that, based on 2019 tax table, as soon as you made $38,701, you were in 22% tax bracket. And how was it possible for somebody like him, who made $20 million in passive income, to have 13.9% projected tax rate, right? So that came to mind. And then back in 2016, when candidate Donald Trump was running for presidency, in one of the debates, Secretary Clinton brought it to the nation's attention that her investigators were looking into Mr. Trump's financial matters, and they could not find any tax returns, except for the 2 years when he was applying for a casino license in the state of New Jersey for Taj Mahal. That they found tax returns because the application required him to file personal tax returns for at least 2 years with the application package. And those 2 years worth of tax returns showed zero income and zero taxes paid. How is that possible? Now, one thing I can tell you, both of these gentlemen had done nothing wrong or illegal or unlawful. According to Donald Trump, IRS has been auditing him for 10 years now. They're very, very smart people who work for IRS. And if he would have done anything wrong, they would have found it by now. Judge Billings' learned hand, some of you may have heard this name before, and he once said, in America, there are two tax systems, one for the informed and one for the uninformed.
I have to pause there. There are two tax systems, one for the informed and one for the uninformed. The uninformed, guess who that is? All of us. All of us filing a 1040. And I almost guarantee you, out of the 86 people on this training, every one of you, if you look at your tax returns, at the very top left, it says 1040. But if you look at the Clintons, you look at Mitt Romney and Donald Trump and Warren Buffett and Bill Gates, and I should keep going on and on, the top of their tax return, if you look, and you'll see it in just a second, says 1041. One change in the number means they don't pay the same taxes, or there are simply two tax systems, and one is the informed and one is the uninformed. So now, unfortunately, you know this. And unfortunately, now you can never forget this, because it will be ingrained into your mind that you now actually know it once you come to the next event where Solomon's speaking, you will learn the whole thing, because he speaks for a 4-hour presentation, but he does like an hour and a half. And you will learn how every one of us, almost every one of us, I can't say all of us, any one of us paying a significant amount in taxes can be the informed. You have the exact same ability to do what these wealthy individuals do. You just were uninformed. So let's keep going.
Both are legal. Here at the Wealth Builders Group, we are very fair and balanced. So we use 2 Republican examples, Mitt Romney and Donald Trump. Let's look at some of the Democrats, right? So here is the Clinton Family Foundation. I'm sure you have heard this name before. Look at the tax return that they are using here. It's a return of private foundation, 990 PF, right? What does that tell you? When you see an entity like that, 9 times out of 10, it's always preceded by complex trusts, which are 1041s, the form that I showed you before, right? 1041s or complex trusts are very, very private entities. Okay, so you will never see a tax return of a complex trust in the public domain. One of the reasons why elite choose that entity is not only that it provides tax savings, not only that it provides ultimate asset protection, but it also provides anonymity and privacy to the highest extent. Here it is, Paul and Nancy Pelosi Charitable Foundation, our current Speaker of the House, and her husband, who is a real estate developer, right? Private foundation, 990 PF. So it doesn't matter if you're a Republican or Democrat or Green Party or whatever party you belong to, okay? Politicians who are part of the elite group of our country are all part of the same structure. They all play in the same sandbox, so to speak. They may be fighting over a lot of other things, but this is one thing that they all agree with and come together on, right? And benefit from. Let's focus on Warren Buffett just for a second. Now, his tax rate is lower than his secretary's, but still begs the question that how is that possible? One of the richest people in the world, his tax rate is lower than his secretary's, right? So something to explore and look into. Now, an interesting point to note, his father, Howard Buffett, was a lawmaker, actually. He was a congressman and from the state of Nebraska. And, you know, when he went to Congress, he learned all this firsthand because that's what's going on. So he learned it and then he came back and implemented these rules and these laws into his family's financial life and benefited greatly from it, right? Then Bill Gates in January of 2019 said, the government should require people in my position to pay significantly higher taxes, right? What an honorable thing to say, right? You think he's being altruistic about this or he's gloating?
Do you think he's gloating or actually being real about it? So like, there you have it. There was way more than that in the 3-day training that we did. But the thing I wanted to get across is that important message that we are just uninformed. We truly are. And I can't sit here and honestly, like, and I said this to the person I met with this morning. I said to him, I said, listen, like when you meet with your advisor, have any of you ever asked your advisor to show you their portfolio, to show you their tax return? Because if they're suggesting things to you, shouldn't they have what they're making suggestions to you? I mean, if their needs and goals are the same, shouldn't they be telling you what they're doing and what they actually have? Have you ever asked them to prove that, to say that? Hey, Chris and Steven, you guys are talking about this privatized banking. Show me yours and I'll show you mine. You know, it could be like that. Like, show it. Great, no problem. I'll do it anytime. Show me your tax return. I'll show you my tax return. No problem. You can see how much money I make. I'm not hiding anything. We make a lot of money, but we make a lot of money and we help a lot of people. Like whatever it is, like, you know, somebody was asking about a specific position. Of course, if I'm talking about it, I own it. That's just what it is. And Bitcoin, you know, for the longest time, I talked about it, but I didn't own it. I own a little bit. And I won't own much because I'm going to buy the next dip, but you know, I can't talk about it if I don't own it. So the important thing to kind of get across and what I'm trying to get, you know, across is, folks, literally the difference between you and I, and if that didn't strike a nerve to some of you, like, then I don't know, maybe you don't care about paying taxes, but it should. Because I'll tell you, I remember when the presidential elections were going on, you know, and they kept talking about taxes, man, that pissed some people off. And it should piss you off because the government takes enough from us and they want more and more and taxes are going up, but yet it's our option. And not all of us, because if you're just a W-2, you kind of, there's not much you can do. But for any of you that are business owners that have an LLC, that are thinking about having an LLC, folks, listen, it's a blue ocean for you. There's a lot of options for you. You can keep more of your money. You don't have to give it away. Warren Buffett doesn't. Bill Gates doesn't. You know, all those people you just saw, and we could keep going on and on. I mean, the Clintons have private foundations. You think it's for good things, but yet their private jets are all funded by their private foundations. Like, look behind the scenes, look under the hood, and you'll find things that sometimes really upset you, but don't get mad. Learn. Become informed. Like, I get really upset when people get mad that someone else doesn't pay as much in taxes or that somebody else makes more money than they do. Don't get mad. Figure out what did they do that you're not doing. That's what you should do. If you get mad, the only thing that should make you mad is I'm mad because I didn't take the time to learn that. That's all. Like, you know, and we always talk about the 5% versus the 95%, those that conform versus those that can create. We can't change that, but we can help the 5% because the 5% want to create their financial future. The 95%, they want to bitch, moan, and conform, and they shouldn't be on here anyway if that's them. So Solomon, I always say it wrong. If you all want to hear him present and you want to learn a lot more about privatized banking, we've got another 2-day advanced IBC training. This one's going to be better than the last. Last one was a kind of a pilot program. It was an experiment and it went over well. We had over 200 people registered. Maybe it's because it pretty much is about as close to free as you can get for a 2-day event. It's $50. But outside of that, like, you learn all of this stuff. So, you know, folks, you just need to get around the campfire, as Brent Kessler would say. Cliff said, what carrier is the best IBC plan for someone that has health issues or maybe a rated case? From experience, it kind of varies. Insurance companies, you know, their flavor changes. Like one year they like vanilla, the next year they like chocolate, the next year they like the strawberry and Neapolitan. It just, they change all over the place. So it's tough to really pin down which one's the best. For health related, it would really have to be which one's the best for a specific health related issue. You know, I had cancer 10 years ago, or, you know, I have high blood pressure. Who's the best one? But AUL, One America, has been probably the best one across the board from an underwriting standpoint. And I think it's just because we have a lot more pull with the company to kind of get things done. Sarah said, is it bad for a 61-year-old woman on a 30% tax bracket to take $300 from their company 401k and traditional IRA and put it all into whole life cash value? Whoa, Sarah, hit the brakes. Calm yourself down a little bit. Let's get on a call and talk about that before you go taking $300,000 out of a taxable vehicle and paying the government more in taxes. Can we just talk about this first? Am I saying it's maybe could make sense to put it all into the privatized banking? Maybe, but probably not. There's probably a way better way for us to do what you're talking about, Sarah, without you having to give the government one giant check at the end of next tax year. I'm promising you that what you're saying might not be the best strategy, but I like where your head's at, and we can get a call scheduled with that and really walk you through that. Do you want to handle the Audra's question here since you guys already spoke?
Yeah, no, I never heard Solomon talking about religious charities, private foundations, trusts. So I don't believe that's right.
Yeah, religious charity or religious foundations or nonprofits are commonly known as 501c3s. Is it the similar thing to what Solomon's talking about? Similar. A lot of the same tax advantages, but it's different. He's talking about complex trust and private foundations and 1041 tax reporting. So they're different.
Who was talking about religious charities recently? I can't.
Andrew was, because remember, he's working with a religious organization in their endowment and helping them get their endowment moved over to the privatized banking, just like a bank would with their vice presidents. They're doing it with the pastors to basically get money into a tax advantaged environment that's earning a guaranteed interest rate. So that's Andrew working on that.
Gotcha.
Let's see what other questions, and pay attention to the chats. A lot of stuff came in, and folks, the chats are coming in wild. So try to get them over to the Q&A if you got a question you want to get answered. Let's see. Anonymous said, "Are you able to provide a link to Solomon, his company? When I look up his name, there are a lot of one hits." Shauna, do we have?
I don't know if he wants people calling him direct. Did he just
so.
want referrals from? I don't know who Anonymous is. So if you're one of our students, we can refer you. If not, we need to talk.
And I assure you, folks, we're not trying to keep Solomon secret. I mean, we just showed you his video, but you got to understand, someone in his position, he's not looking for lots of clients. I hate to say that. He's looking for the right clients. He's looking for clients that have a taxable problem, that don't want to pay taxes. Maybe somebody that's paying $50,000 or more in taxes per year. That's what he's looking for. And, he is definitely somebody that would be a referral-based entry only. So
I have his contact though. So if you just let me know who you are and I'll send it to you.
We just got to ask a couple qualifying questions to make sure that it's going to be a fit. We don't want to waste your time or his in referring you over. If it's not going to be something that's going to benefit you, because I can tell you just from my own experience, I'm working with him right now, and it's not cheap to set all that stuff up. It's not. But what is not cheap? Well, let's just say it costs 20 to 50 grand to set up all that stuff, but you pay 50 grand in taxes every year. Well, what if you could take that 50 grand in taxes down to 15 grand in taxes? 50 grand would seem like a drop in the bucket when you're going to save that much in taxes for, I don't know, the rest of your life until they change the tax law. But the beauty about what Solomon teaches and what we do with privatized banking, they're never going to change that, folks. Really? People are always like, oh, until the government repeals that and rolls that back. Why would the government ever do that? You just saw that's exactly what the politicians and the lawmakers and the elites are doing. Do you really think they don't have an influence on that ever not going away? That'll never go away. Privatized banking's been around for hundreds of years. It'll never go away because that's where all the wealthy have their money and all the banks. So any of you that think that that's changing or going away, you're wrong. Absolutely, full-heartedly wrong. People that think that the 1041 tax laws and the private foundations and all that are going away, they all got their money there. You just saw it. They're not going anywhere.
Yeah. And you keep in mind, like Solomon and Harry were bonus sessions for a reason. Like those were basically favors to Chris. Like those weren't people that we brought in to specifically, basically create business for themselves. Like they came in just to talk to us about what's going on. Like they weren't trying to solicit any business, but we're happy to share the referral again, but just want to make sure it's right.
Yeah, 100%. So folks, there's the link too that Shauna put up, and we've got all the links there. We got the next 2-day coming up, and it's going to be, what are the dates for the 2-day? I think we put them on there, didn't we?
The 2-day, the link's on here. You want me to click it?
Yeah, just put that in there again. And I want to hit Jim's question. Technically, Biden just said no one making less than $400,000 a year will pay a penny in taxes. I plan on submitting that video clip with my forms this year. Okay, so let's talk about that, because that is a big thing. So a lot of you, if you're like, I don't make $400,000, these tax increases aren't going to affect me. Okay. Again, we really need to think about this. The tax hits are going to affect the wealthy, the landowners, the property owners, okay? Those are the people that do most of the jobs in this country, right? The people making over 400,000 are usually the ones owning the businesses, employing most people, making most of the products. So if you tax the big companies, okay? If you tax Apple more, if you tax the person that makes your bread and your toothpicks and your diapers more, which that's exactly what you're doing, where do you think that money is going to come from? Do you think for a second they're not going to raise the price of their goods to compensate for the extra taxes they're paying? Folks, there's nothing free. There is no free lunch out there. The government is saying, we're going to give you this free. We're going to give you that free. We're going to give you daycare free. We're going to give you that free. Nothing is free. We all pay for it. And even though it's not going to directly impact your taxes, it's going to impact the taxes of the people that make the goods and services that you buy, making your goods and services more, which is worse because you're going to pay more in taxes because of the increase in, and listen, I'm not going to say we all are going to pay more for goods and services because of what's going on. There is no free lunch. The cavalry isn't coming. We're in this we're all in this together, but we're all in this nonetheless. So don't think that this is like tax the rich and the poor get the money, the Robin Hood thing. Listen, no, it's not going to be the case. It's just not.
Well, technically Biden was right, because no one is going to pay a single penny in taxes.
Yeah,
it's a lot more than that.
Well said.
So Sarah missed your question. So Sarah, we were just saying that you need to have a conversation with one of us to discuss that specific, because you're going to pay a lot of taxes on that if you pull it all out at once. So we need to have a game plan of how to start moving it out of there and what that's going to look like, and if it's right for you or not in your overall financial plan. So there's a little bit more that goes to that. So just set up a call so we can discuss those.
Yeah, so we're not saying it's a bad strategy, but please pump the brakes and don't do that yet. Let's have a call so that we can tell you how to best strategize that when we know your needs and goals, because the last thing you want to do is take 300, from taxable accounts like 401ks or traditional IRAs, and then the government's going to love you. They won't even send you a thank you card or one of those edible arrangements, but you'll get a big tax bill at the end of the year. And we don't want that. What we could do is spread that out, do a lot of other things, and do the same accomplished goal, but without having to write that ginormous check all in one shot to the government. What did Dustin say here, Stephen?
Just asking about how the interest works when it comes out of the IBC policy. So is it, simple interest, complex? So it's not charged all at once, and it's not like a car mortgage because it's not amortized. So you can explain it, Chris, if you want.
Yeah, I mean, Dustin, we get this question a lot. We've got lots and lots of videos on YouTube that explain this. Not trying to dodge the question. I'm just trying to be considerate of time. So essentially, if you're making, let's just use just the guaranteed 4% compound interest. And let's just use, let's use 10 grand because it's easy math. If you make 4% on 10 grand, the next year you have 10,400. Stephen, with a calculator, can you just tell me what 4% of 10,400 is?
Well,
the simplest answer is it's more than $400. Okay. But who's going to figure that out? Is it like 420, 430?
Yeah, it's right around that. Yeah,
right, so it doesn't really matter. The only thing you need to understand is that 4% of 10,000 is 10,400. 4% of 10,400 is more than 400, and 4% of whatever the next number is. See, that's compounding. You need a compound calculator. So as long as we understand compound interest, then we are sitting in the same corner as Albert Einstein. And he says, those that understand compound interest earn it. Those that don't, pay it. So let's go over here to the loan, right? And there's all sorts of different loans. Most of you are used to your mortgage, where you give up 80 to 85% of every payment to interest. I just looked at my newest mortgage, and I took out a mortgage. Why wouldn't I at these rates? My current mortgage on my new house is 3.75%. Everybody would be like, well, some of you are like, well, that's a lot, but I mean, that's still pretty low, and you're like, wow, that's a great rate. But what is my actual interest over the stated time period that I'm going to pay in interest? Like, how much is that? I could show you my mortgage statement. That's how much interest I'm actually going to pay. But wait. You said it's only 3.75. It is. But this is how much I'm going to pay. How? It's called velocity, folks. You don't understand the velocity of interest. But see, here's what's good about the loan. So forget about that. That's how a mortgage works. But how does your credit card work? It's easy. Your credit card, if you borrowed $1,000 and your credit card was 10%, what's 10% of 1,000, Stephen? $100. $100, right? And it doesn't matter. It's not more than $100 next month or next year. It's always the same. Simple interest. Your loan from your policy is simple interest at 5%.
And so it's daily, right? Daily. So you're only paying.
This is paid daily. Yeah. This how they do it is if you took a loan, I don't know, just do the same thing. So $1,000. So what would that? That would be is it $5 or 50? $5, right? 5% of 1,000. Holy crap! I'm forgetting it. I should be able to do this. $5.
Yeah. What? 5% of 1,000?
Yeah. Isn't it $5? Help me out here.
Yeah.
$5. I don't know why I wanted to make it $50.
$50.
Okay. So holy shit. $10. A lot of numbers here, folks.
Beat us to it.
All right. So 5%. Don't laugh at me, Stephen. You didn't know. $50. So you're going to pay $50. So if you never paid that loan back, Next year, it's $50. Next year, it's $50. Next year, it's $50. Next year, it's $50. It's always just the same amount. It doesn't compound. It doesn't do what this does, because every year you're compounding in a higher amount. Over here, you're never compounding. It's simple. And the insurance company, what they do is just for the year, they just say, you got $1,000 loan. We're going to basically assume that it's going to be $50 in interest owed at the end of the year. But if you pay this loan down, they're going to keep reducing the interest that's due based on the amount you pay down. No matter how you run the math on this, we do it in our video really well with the really good bank paying you 4%, but then the car loan at 6%. No matter how we do this, you will make more earning less here under compound interest than you will paying a higher interest rate. So you can make more earning 4 when you're paying 5, or you can make more earning 4 when you're paying 6 because of compound versus simple interest. And I feel really stupid that I couldn't do the math on 5%. Just got a lot of numbers out there. So you guys, yeah, look at it. All the people like 50, 50. Chris, I don't need a nap. I just every day, and sometimes they blur. I'm so glad Steven didn't know that, because that makes 2 of us. All right, so let's see. Jimmy says, I have a company 401k that I am no longer contributing to because I started a new one with another company. It's about 90 or so. Can it be used for privatized banking since it's just sitting there idle? It could, Jimmy, but I'd actually suggest doing something even different. I'd suggest moving that to a self-directed IRA. Here's this one's for all of you, but really just for Jimmy, because this is such a cool idea. So here's what Jimmy could do. He's got 90K, okay? He could, and I'm just gonna draw this big red line here. He could take the money out, pay taxes, which, some would say is not such a bad thing because taxes are probably going up, but nobody wants to pay tax. He could pay the taxes in the 90, take whatever's left, 75, put it into the private banking. Okay, but we don't like paying tax here, obviously. So another idea would be to take this 90, not cross the line, keep it on the qualified side, roll it to a self-directed IRA. Then you could take that self-directed IRA, invest that in something like Safari that pays you 12%. And now that 12% is building this. And now you've got that going up and you never cross the line. Another idea would be you could do the same thing, then just take the 12% out every year, pay the taxes on just the money that you made out of, the investment, just pay the tax on that and fund your private bank with made money. Instead of paying the taxes on all of it, let's just pay taxes on 12%. That is money that doesn't even exist today that you make because of doing this the right way. Stephen, what are your thoughts on that?
No, perfect.
So Jimmy, hopefully that helped you a little. I'm happy to get on the call.
Whatever you do, get it out of sitting there at that old 401k. That's losing money.
The make and model of the TV, it's a Samsung, and I don't know what it's called. Andrew was the tech guy. He would have to tell you. It's pretty damn cool is what it is. Yeah, we use these a lot. So we are at the end of this, folks. We do have an Ask Me Anything today at 4:30, a happy hour Ask Me Anything that me, Steven, maybe Hannah, I know Andrew will be there. We'll have a cocktail answering all your questions about all the topics that you can ever dream up. I don't care what you ask. Ask how did they make that sour beer? We won't know, but we'll Google it and find out. Whatever you want to know, we'll put it in there, folks, and we'll do that. But here's the thing. We talked about a lot of information today. We answered a lot of questions, and all these questions were great knowledge. Okay. That all the stuff we saw in the video was great knowledge. We got to take action. The person that said knowledge is power wasn't entirely true, because knowledge is not power. It's actionable knowledge. Knowledge you take action on, that's the real power. So we just put up a whole bunch of events. We've got our next 3-day coming up. The first one, it'll be the last one for a while. It's coming up June. Okay. We put up 4 seats for the inner circle. If you're serious about being a private lender, you want to lend on Chris Rude's deals or, other deals that we have in the private money club, but you don't quite know how to protect yourself and do that the right way, how to be the bank the right way. You got to take one of those 4 seats, take action on it, and get out here to Buffalo. It's beautiful in the summer. Then we talked about it, probably what I think will be the event that we talk about for the next decade, which is going to be the experience, an event that will make an experience of your lifetime. And you're going to learn from, how do you say 100 millionaire? It's not a billionaire. They're a millionaire, but they're not just a millionaire. They're like 100 millionaire. Is that what you say? You're going to be surrounded with several 100 millionaires. and you're going to be able to literally sit next to them, have lunch with them from catered chefs. You're going to be able to have taco trucks from Buffalo, which are awesome, Lloyd's. We're going to do all sorts of unbelievable stuff. So don't come to the experience just to come to learn. Come because it will be an experience that will change your life. That's what the experience is. So you can join us for that. And then lastly, sorry, I'm going long. There's a lot of things. We've got our 2-day privatized banking, the infinite banking 2-day advanced training. And that's coming up. And that's where you'll hear from Solomon. You'll hear us talk about individual and business uses for your private banking policies. So folks, I hope you guys enjoyed this wealth webinar series. We sure did. I had a blast. Stephen, did you enjoy this?
Yeah, that was fun. That was a lot of fun.
Super fun. So we don't get a chance to do this because we always have speakers. So we love it when we get to just come on and just chat with all of you and teach you. So thanks for sticking around. We'll see some of you at the Ask Me Anything happy hour today at 4:30. Other than that, I'm sure we'll see most of you at one of the next events that we have coming up. Until then, have a good evening and we'll see you soon.